Alrighty. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis on Adobe stock because this one needs an update. I've done videos on this before, but there's always things changing, right? With not only this company, but with the AI landscape and the times that we're in right now, technology and companies are always changing. So, Adobe has not recovered. I mean, the last 3 months, pretty much the last 3 months, we're still looking at the stock is hovering around $240 a share, and I'm down 34% on this one. I don't feel the need to add more shares because I already have a pretty big position in this, so I really don't want to add more shares. I go back and forth between how bullish am I really on this stock because I sense maybe a little bit of a threat, or just maybe they don't deserve the same multiple that they did a couple years ago. But at the same time, I don't see them being a company where all their business is eaten away at, and Canva and these AI startups are going to destroy their business. I don't really see it like that for a couple different reasons. Which, let's get into some of this. For one, the financials. This is now under $100 billion company, which means the PE on this is under a 10, which is insane. The free cash flow yield is over 10%, which is also insane. Those are things you never see, especially with a big software company like this, big, a name brand like Adobe. You do not see those stocks trading at those valuations. Meanwhile, maybe like a PayPal you see, and compare PayPal to this. This company has way better financials. This company is growing revenue at 11%, 12% a year. Okay. Their EBITDA, their net income, all the numbers look good. Okay. Net income is up only 7% last year, but over the last 2 years, it averaged 22%. Free cash flow, same thing, 12% last year, 26% in the last 2 years. The one of the big things we're going to bring up in a little bit, but the share buyback program, the cash to debt is not bad. They have more cash than debt. Shares outstanding has been huge. They bought back 6% of shares in the last year. And then we look at the valuation. Past 5 years, price to earnings, just insane that we're paying, 10 times earnings now when the stock normally trades at 40. Free cash flow deals, same thing. Look at this chart. Look how crazy this is. The last couple of years, it normally trades at 3%. Now we're at over 10%. Price to sales of only a 4. So let's get into this company's numbers. EPS, we already said revenue was 12% up 12% year over year. EPS of $6, which is non-GAAP, which I like to look at the GAAP one more so. Operating cash flow, record $3 billion for the first quarter. ARR linked to AI first applications more than tripled year over year. Despite the beats, the stock dropped because of the net new digital media ARR, which came in at 400 million, missing the 450 million consensus. We have, again, super cheap stock, the median target of $322. I would hope it goes higher. I mean, at this point, 320 is a big move up, but I would like to see it get back to, 350 to 400, really. That way I can make some money. So here's the important things. Last month, the CEO announced he's retiring, and so I guess that's, creating uncertainty in the stock and the sentiment, which I don't see that as a big deal. I mean, he's been there for 18 years, so I mean, and it's I don't see what's wrong with getting a new CEO. Fears persist that foundational AI models like OpenAI, Google could make high-end editing tools less necessary, lowering the barrier to entry for amateurs. This is true, and I can understand that. But those companies are also partnered with Adobe. Canva is another one, continues to erode Adobe's dominance at the lower end, boasting over 260 million users. That one I totally agree with. I totally understand that. I use Canva. I don't use Adobe software for pretty much any. I don't really use it at all. Um, and so Canva is very cheap. It's super simple to use. It has tons of super effective, easy, valuable tools on there that you could do a lot of different editing things with, create ads, create thumbnails, create pictures, videos, editing tons of different things. So I like Canva. I do like Canva, and I could see maybe that does take away some market share and business from them. But Adobe is still growing. Why are they still growing 12% though? I mean, the big thing with Adobe is that they are the kind of the industry standard for big businesses and professionals and stuff. So, I don't know if that's taking away. It's not like it's really destroying their business. They paid $150 million lawsuit Okay, that's I don't really care about that. That's such a tiny part of their numbers. Unveiled this year, this creative agent Firefly AI assistant allows users to control multiple flagship apps like Photoshop, Premiere, etc. through natural language, potentially simplifying complex workflows for millions. Great. Adobe is shifting from selling tools to selling orchestrators. These AI agents can autonomously execute marketing campaigns, creating a massive new revenue stream in the digital experience segment. I like that one a lot. Adobe's moat remains its indemnity guarantee. Fortune 500 companies prefer Adobe's AI because it is trained on licensed data, avoiding the legal risk associated with other. Now, that one is also a big plus. I like that one a lot. Does that mean that any other company can't get that also? I don't know about that. I think Adobe probably has the upper hand there, and they're in first place. But I don't think that means that somebody else can't also achieve that. Then here's the big news from the last couple of days. Management has signaled confidence in long-term floor of the stock through an aggressive share repurchase program. If they are buying back $25 billion worth of stock, and the stock is around 100 billion, it's actually less than 100 billion, that means the stock should go up 25%, right? If you put $25 billion into a company that's worth 100 billion, that's a 25% jump. That's the way I see it. So hopefully over the next year we see it jump over up, 25% plus. Now, do they have the cash for that? No, they don't, especially with the debt. They only got a little over $1 billion worth of actual cash available. Which I mean, I guess they could put all 6 billion into that, but they're making what? They're making free cash flow. They're making $10 billion of free cash flow. Okay. So over the course of 2 to 3 years, let's say 3 years, maybe they could invest 25 billion, right? Maybe 2 years, but probably closer to 3 years. Hopefully they get that $25 billion in there. That's the idea. So we're probably looking at like $8 billion a year. So the stock should probably move like 8% this year just from them buying. And then with that should signal some confidence and hopefully other people invest too. Then we have analysts expect the revenue to be 23 to 26. That's kind of a wide range. If Adobe can prove that its AI is a net new driver of subscriptions rather than just a defensive feature, the stock is positioned to go back to over $300 by late this year. I sure hope so. Then we get into this. This is what I was talking about. The collaboration with Anthropic is also a strong, pivotal strategic move within this agentic era, as Adobe will integrate the Firefly AI assistant directly into Anthropic's Claude chatbot. Adobe is meeting creators where they ideate. This open ecosystem approach, which now extends to OpenAI, Google, and Microsoft, is basically laying the foundation for the future of software interaction through AI interfaces. That is big news. That's a big deal. That means why that to me that just knocks out a lot of the threat. Because if you're partnering with these giant companies that are posing the threat, that kind of eliminates most of the threat, right? If you're working with them. Well, if they're going to compete, if these companies wanted to compete with Adobe, why would they partner with them and have them integrate their software? Now, could other startups, jump into this market and try to take market share like a Canva or something? Sure. Or a Figma or something? Sure. But again, you have to add up, you got to look at the pros and cons and add up, okay, what moat does Adobe actually have? And it has quite a few. Like I said, industry standard. It's already integrated with these big companies. It's already the name brand. It's already has all these customers. It's still growing at 12% per year. It already has you don't have to worry about copyrighted material, all these things. That now it also has this. It recently acquired SEM Rush for $1.9 billion in a push into the digital experience sector's new frontier, generative engine optimization. SEM Rush will provide Adobe with the tracking and monitoring capabilities necessary to manage brand visibility inside these answer machines. Basically, it provides tools to ensure that a company's website is blah 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 is machine recommendable, which is mission critical for 99% of the firms. Okay, so that's all the good news for the stock. The one thing I see dipped here that I don't like is performance obligation. It went down a little bit. Still $22 billion though. So I don't know. Honestly, I mean, that when I go through all this, it almost makes me want to buy more shares. But again, I already have so much in this, and I don't really want to allocate more into this. But you look at the risk to, and the problem is I've been saying this for a while, and this stock has been dropping a long time. while the numbers are getting better. Because, again, the theory here is that although AI is not, these AI startups are not killing Adobe yet, it doesn't mean they won't in a year or two. And, I guess time will tell. But again, with all the things I just listed out, I think Adobe has a pretty nice moat still going for it. It definitely does not deserve to be trading at 10 times earnings. I don't see that. I think it should be trading at double that. So that's where I stand with the stock. Let me know what you guys think down below, and I will see you in the next video.